Hi traders, so my name is Benecci. I'm the owner of the Vantage Club and I have been trading about 15 years now. So I know I probably don't look that old, but I am an old man. So what I thought I'd do is just give a quick introduction, say hello, because a lot of you might be seeing this video for the first time and seeing me for the first time and not having a clue what's going on the charts. So I thought I'd give a quick introduction as to what is what on these charts and then talk over a trade that I took yesterday. And then hopefully, if you're new to these tools, you might see for yourself how beneficial they are in order to find extra confluence in whatever trade strategies you're currently doing. So with that said, let's just jump into this. So let's just start off with this middle chart. This is called a market profile chart. This here is a market profile. So this is the market profile. And I have opened up this profile, which shows here all the activity that was taking place within this profile. So this is a time-based profile. So every single one of these, what we call TPOs, time price opportunities, represents 3 minutes. So that's like just looking, this bit is just like looking at a 3-minute candlestick chart, you could say. But the way it's arranged is that it calculates the data and arranges it in such a way that we can find levels where we can trade from, which you will not normally see or get printed on just a normal candlestick chart. So I won't go too much into this, but basically we have a value area low, something called a value area high, and within this value area is what is deemed as fair value, good price. This here is called a point of control or a POC. That's where most time spent within this session of the profile. And these can all provide opportunities for taking positions and finding where liquidity would be residing above if you know what you're looking for, which obviously I've been teaching to my guys and mentorship students for many years now. But there's plenty of information on the internet about what value areas are, market profiles. I use my profiles completely different to the industry standard in that I use completely custom time settings. So they open and close at very specific times. The TPO block sizes are all set completely different to industry standard because, again, I find it enables me to find the best trading levels to trade from. And I have multiple session profiles that we use throughout the day to find the best levels. And as you'll see, if you've been following me for a while, when, for example, red folder news drops, it will always go up to one of my profile levels. It's guaranteed. Always does. 99.999% chance it will hit one of my levels. They're that accurate. It's just nuts. But anyway, so that's what a market profile chart looks like. And in this instance, I took a trade yesterday having rejected from the point of control, which is that red line there. But we'll talk about that in a minute. We've also got on the left-hand side a footprint chart, which basically prints data, real-time live transactional data, and allows you to see inside your candlesticks at the transactions that are taking place real-time between buyers and sellers. So that gives us an edge in the market in that we can understand who's in control of the market. So that's what that chart is. We've then got the top left, which is a VWAP chart, the volume weighted average price chart, which is basically like an institutional benchmark line where algos and institutions operate around and deemed to be fair value. And then we've got the deviation band extremes, where it's like bargain basement area sort of thing, your premium and discount kind of areas. So that's very briefly what that means. And then the bottom chart is a proprietary custom chart of mine, which just signifies where there's absorption taking place. But again, we'll go into that in a minute. So that's a quick overview of what these charts are. I took a trade here yesterday and got out down here, which is where the black line is, but we'll go into all this. So first of all, let's just talk about this footprint chart, which is what everybody is always wanting to know about, what a footprint chart is and how it can be beneficial. Well, I'm going to give you a quick interpretation of what I was reading in this footprint chart yesterday in order to me help find a trading decision to get short. So with that said, let me just switch over to another pen. There we go. Right, okay. Right. So basically, this is a 10-minute footprint chart. So all these are like 10-minute candles, if you like. And basically, it provides order flow clarity into real-time intent and aggression. So with that, we can see there is absorption at limit orders. So by that, I mean this little yellow line there, that highlights a study that highlights where there's large resting limit orders. So where the pending orders are. We can also see on the bottom right here on this chart as well, it's highlighted where the limit orders were sitting. So that's good to know. So we know there's large limit orders sitting there. We can see that there's a large, this green number is buy delta. So a lot of buyers were buying into this area, and they're buying into the limit orders where there was a big passive institutional investor sitting, taking all those buy orders, and then they moved the market down. So what I was basically seeing was it was indicating that there's strong seller absorption at the highs. Okay. So we had a lot of green delta volumes coming up. You can see here there was a lot of buying taking place into the activity, into the resting limit orders there, and then it was met with a lot of sellers sitting there absorbing everything. So that was a good sign that we're seeing a rejection taking place. And you can see that there's a little selling tail there as well, that pin tail. So that tells us there's all trapped buyers in there who would then be underwater should we reverse. So that was what I was reading on this candle. Obviously, again, if you're new to this, you're going to be scratching your head. But once you've looked at this for a few weeks, a few months, it becomes second nature to you, and you'll wish you just wonder why you never used it before, basically. So yeah, you can see basically that the buyers here, they just couldn't lift the offers above the resting limit orders because the whale was just absorbing it. So my institutional read on that basically was that it was a kind of a classic iceberg situation. So we had like iceberg sell side absorption taking place, and then a decreasing positive response as the market kind of faded downwards and buyers just decreased in interest and just got consumed by sellers. That's basically what happened there. So that's basically what the footprint chart was. We'll then go into the middle chart, which is the market profile chart. And as I said before, we got the point of control there, and then we rejected. So this kind of confirms to me as we came up with a strong intent into that area. It's like a liquidity run, if you like. And it confirms the rejection that there was a structural rejection from the prior liquidity zone being there. So with that, it was basically meaning that we had exhaustion of buy side interest, which again, we can confirm with what we just spoke about, the footprint chart, and also that there's an entry of aggressive initiating sell orders taking place as well, which again, on the left-hand side of that candlestick, confirms that as well. So that marries up with that. So that was a logical place to be looking for a trade, and we could use the order flow to validate it. So that's basically what that means. My institutional read would be on that it's kind of an auction completion. So the auction's completed, and then we've got an imbalance transfer. So once the auction fails above the point of control, the market aggressively targets the opposite side of the low volume, which would be in this case back down towards the session lows in alignment with the VWAP. So that basically is what that means. That's the market profile chart. We've then got my VWAP chart. The black line is a VWAP. Oh, excuse me. In fact, let me just pull this chart over. It'd be easier to show you what a VWAP chart is. So this is basically a VWAP chart. This black line is the current day's volume weighted average price, which we said was the institutional benchmark for gauging fair value with inventory in the market. And then we've got the deviation band extremes. Once again, my deviation bands are not industry standard. I use just over 2.5 standard deviations to 3 standard deviations. So that's like mega bargain basement sort of territory. And when we have this kind of flat VWAP, the bands will therefore be fairly flat. And we call that a rotational environment, a balanced kind of environment. And when that happens, it's like taking, candy from a kid. It's my favorite days because I literally can just fade the deviation band extremes. So we enter a trade there, fade back towards VWAP. And then again, we could have faded from there, and had price been going, the likelihood is it would have come back to VWAP again. And again, if price was down at the bottom on a flat VWAP, we could look to fade back up towards VWAP. So that's a very quick talk as to what VWAPs are. That these coloured bricks, they're exhaustion bricks for study of mine. This says that the market's becoming a bit exhausted, and it's an early warning sign that you might see some sort of reversal coming in, sort of 10, 20, 25 pips time. So it's an early warning trigger for me to look out for a trade. When it marries up with the deviation band extremes, it's just another confluence. So that's kind of what that is. So we could see, I'll just pull that chart back over to the other side of another screen. We had delta divergence at the deviation extremes. So that was in alignment with the point of control, in alignment with the footprint chart. As we've just spoken, delta extremes, deviation bands, 2.5 to 3 standard deviations. That's how I set it up. And that basically indicates that the market had auctioned too far from value, us saying that value is the black line. So it's overstretched. It's super good price to be buying from for the institutions too. So the mean reversion, so reversion back to the mean, is a very high probability trade. So that was a great confluence as well. So if you want an institutional sort of read on that, I'd be saying that it's a mean reversion driven by delta divergences, and that's ideal for sort of a good high risk to return counter trend setup if we got confluence from exhaustion and things, which we did have. So that's basically what that means. We then got the bottom chart here, which is my custom absorption chart. Let me pull that over and show you that quickly. So this is what my custom absorption chart is. It's calibrated with a lot of calculations that I've done, and it triggers when all the parameters are met, and then it triggers the absorption trigger to say that there's been significant amounts of absorption taking place in that kind of area, and therefore it can be useful in assisting you in making your trade decisions. And as you can see, these last few days, it's triggered, price has gone up, triggered there, we got the pullback to VWAP, triggered there, got pullback there, triggered there. You can see for yourself, can't you? It's not stupid. So yeah, that's basically what the absorption chart does. And we can see the resting limit orders were there. So we can see that basically institutions were placing offers to hold the top, but acting like a ceiling, absorbing any upward thrust. So again, it confirms that aggressive buyers were getting absorbed by passive sellers because the institutions were placing offers to hold this top here. So that's basically what that is. My institutional read on that was going to be something like, if I was going to have to break that down, I'd be saying that it shows that there's a resting supply ceiling, and then it will confirm the rest of the trade positions, what we've been talking about here. And it's that type of signature, what we look for, and it's a classic setup that institutions leave when they're offloading like large size quantities. So again, some of these would have been buy positions offloading, liquidations. That's what I'm looking for. Liquidations are long liquidations. There you go. That's what I was looking to say. So basically, that is what was going on in the charts and how I was reading them. Got my short position in, took what, 25 pips or something like that. 84. I didn't get it up there. I got in on that second resting order lot there. So yeah, about 30 pips or something like that. So hopefully you got a bit of value from that. And yeah, if you're interested to learn exactly how I trade um, and learn all my tools and things, drop me a DM, drop me a comment if this is a YouTube video you're watching. Go check me out on Instagram. It's the Bankers Club. Drop me a DM and we can talk. I've got a few options I can help you with. Being a Discord community where I've got about 250 people in there, I think. I've taught over 2,000 people in the last 6 or 7 years, and they're all using my charts. And I also do very limited availability. I have got one-to-one mentorships, which I teach the guys not only all this sort of stuff, but also other secret stuff which I've never shown anybody else before, which is all very custom-made software, which is a bit of a game changer. So those guys in the mentorship are exclusively getting access to that sort of stuff. Um, but if you want to get into the mentorship, you'd have to sign an NDA because what I teach in there is very secret. So with that said, I hope you enjoyed this video and go check me out on Instagram, the Bankers Club, and reach out to me. And it'd be nice for us to have a chat if you want to learn more. All right, I'm going to get off this video and hopefully you've not fallen asleep. And I'm going to go and have a beer. All right. Have a great afternoon or great morning or great night, whatever you're doing in whatever part of the world you're in. All right. Ciao for now.